Hello and welcome to the Financial Report. Let's get right into today's market action, which tells a pretty clear story of rotation rather than panic. We saw a notable divergence in the U.S. indices. The Dow Jones Industrial Average managed a modest gain of 0.26%, closing at 53,417. But the tech-heavy Nasdaq wasn't so lucky, falling 0.77% to end at 25,980. The S&P 500 slipped 0.28%. Digging into the details, Nvidia dropped 3.2% and Tesla fell more than 4%. This pattern of a rising Dow and a falling Nasdaq tells us money is clearly moving out of high-valuation tech growth names. Now, if we look at Asia, we saw a very similar story. In China, the Shanghai Composite was relatively resilient, down only 0.59%. But the Chi-Next, the growth-focused board, tumbled 3.21%. The CSI 300 fell 1.21%. Interestingly, the central bank injected 200 billion yuan in net liquidity through its medium-term lending facility, but the growth sectors didn't respond. That tells us the market is currently pricing industrial policy and supply-side shocks, not liquidity easing. So where is the money going? It's flowing into three clear directions. First, gold, which rose 0.64% to $4,719 an ounce. Second, cryptocurrencies. Bitcoin gained 1.47% to $78,740. And third, defensive value stocks, like the traditional names in the Dow, which are seeing inflows. At the same time, the 10-year Treasury yield pulled back to 4.7%. The VIX, or fear gauge, ticked up to 15.85, but it's still well below the 20 level. This suggests money isn't leaving the market entirely. It's just reallocating within risk assets. Now, the biggest surprise today, and the key driver of this rotation, was news that Nvidia's next-generation AI chips might be delayed due to advanced packaging capacity constraints. This shifted the market's pricing logic for the AI sector from demand explosion to supply bottleneck. And the market's first reaction was to derate valuations. Interestingly, the market also ignored two pieces of positive news. One was the central bank's liquidity injection. The other was the possibility that OPEC+ might extend production cuts. Even with that, oil prices fell. WTI crude dropped to $85.10 a barrel, showing that demand concerns are outweighing supply reduction expectations. Let's talk about currencies and rates. The dollar index edged up 0.14% to 98.98. But the offshore yuan stayed stable at 6.7205, not following the dollar higher. This is important. It tells us the dollar's small bounce isn't driven by risk aversion. Chinese assets aren't being sold off, and there's no external liquidity pressure. The combination of falling treasury yields, rising gold, and falling tech stocks is a risk-off repricing. But the stable currency tells us this isn't a systemic crisis. It's a rotation within risk assets. Looking at sector opportunities, the strongest themes today are two. First, rare earths and related countermeasures. The catalyst is the U.S. Commerce Department adding 14 Chinese entities to its export control list, effective August 26. China's Commerce Ministry has already responded, saying it will take necessary measures, and there's a strong expectation of tightened rare earth export controls. Second, the crypto ecosystem. Bitcoin and Ethereum are both up, and related ETFs and stocks are seeing inflows. This is the third consecutive day crypto has appeared as a hot sector, so the continuity is confirmed. On the flip side, the weakest sector is AI hardware. Nvidia's shipment delay is a real supply-side negative, and the market is treating it as a valuation hit. But a note of caution here. A-share semiconductor equipment names might actually benefit from the entity list catalyst and run their own domestic substitution story. So don't paint the whole sector with one brush. Looking ahead to tomorrow, here are 4 things to watch. First, the Shanghai Composite is expected to be weak with a range of 3,858 to 3,900. Whether it holds 3,858 at the open is key. Second, rare earth and countermeasure themes should remain firm in the 1 to 3 day window before the entity list takes effect. Third, the 10-year Treasury yield should trade between 4.68 and 4.74, with a downward bias. Fourth, Bitcoin should stay in a range between 76,900 and 79,900, with a firm tone. So let's wrap it up. Today's market is best described as structural risk-off, with a probability of about 70%. The main capital flow is out of high-valuation growth stocks like AI hardware and new energy vehicles, and into gold, crypto, and defensive value names. Our strategy recommendation is to hold controlled long positions with hedging. Key levels to watch are 3,858 on the Shanghai Composite and 29,000 on Nasdaq futures. If Nasdaq futures reclaim 29,300, the VIX drops below 15, and the Shanghai Composite holds firm on shrinking volume, you can raise your risk budget and add to policy benefiting sectors. But if Nasdaq futures break below 29,000, or the Shanghai Composite falls through 3,858 on volume, cut your position to below half. In short, follow policy, avoid high valuations, and wait for the supply bottleneck to clear. Thanks for watching, and we'll see you tomorrow.